Something big is happening behind the scenes in AI. Massive money, quiet deals, and power moves most people are missing. While everyone was distracted, some of the biggest tech players made moves that could decide who controls AI next. This isn't just AI hype, this is about control, infrastructure, and who's positioning themselves for the next decade. Watch closely. If you skip this video, you'll miss how the AI power balance is quietly shifting right now. Let's break it down. Nvidia has purchased about $5 billion worth of Intel shares. This completes a deal first agreed in September 2025, where Nvidia was set to buy 214.7 million Intel shares at $23.28 per share in a private placement. This transaction gives Nvidia a significant minority stake in Intel of around 4% of the company, a move that was approved earlier by U.S. antitrust regulators. Why this is important? Nvidia is best known for its AI accelerators and GPUs that power everything from cloud AI to autonomous vehicles. Intel has been the leading maker of CPUs for decades, but in recent years, it's struggled with market share and strategy missteps. This $5 billion investment doesn't just give Nvidia a financial position, it signals a strategic alignment between two major chip companies. What it means for Intel? For Intel, this is a major capital boost. After years of struggling with manufacturing delays and strategic shifts, Intel had been seen as needing fresh momentum. Nvidia's investment, alongside earlier investments from the U.S. government and SoftBank, gives Intel strong financial backing as it tries to rebuild competitiveness. Why Nvidia is doing this? For Nvidia, this is not just about owning Intel stock, it's about strengthening its position in the broader chip ecosystem. By holding a stake in Intel, Nvidia may deepen collaboration between its GPUs and Intel's x86 CPUs, which could benefit servers and AI systems. It positions Nvidia not only as a leader in AI chips, but also as a strategic investor in a core part of computing infrastructure. After the official filing, Nvidia's stock dipped modestly, reflecting broader tech stock movements and profit-taking at the end year. Intel's stock was relatively stable, with some investors seeing the Nvidia investment as a positive support for the business.
Okay, so let's move on to the next news.
A growing number of companies are signing multi-billion-dollar deals to expand their AI infrastructure. The hardware, data centers, cloud capacity, and computing power needed to train and run AI systems. These deals include big names like Meta, Google, Nvidia, OpenAI, Microsoft, Amazon, and others. The demand for AI computing power is exploding, and companies are responding with equally massive capital spending to keep up. Why are companies spending so much? AI models, especially large generative models like those behind ChatGPT or other advanced systems, require huge amounts of compute power. Training these models and serving them to millions of users isn't cheap. It demands powerful processors, specialized AI chips, and vast data center infrastructure to handle the workload. Who is investing the most? 1. Nvidia and partners. Nvidia is central, not just with its own chips, but through partnerships, including multi-year GPU supply agreements and billions in infrastructure funding with AI labs and cloud partners. 2. Microsoft and Google. Both companies are spending tens of billions to expand their cloud AI capabilities and lock in long-term contracts for compute capacity. 3. OpenAI and Oracle. Joint ventures like Stargate, backed by multiple tech giants, aim to invest hundreds of billions into AI data centers and infrastructure over the next several years. 4. Meta, Amazon, and others. Meta has made large investments in AI cloud deals and computing, and Amazon is reportedly weighing multi-billion infrastructure spending to support AI workloads globally.
Okay, so let's move on to the next news.
Dealmakers in AI sector didn't slow down at all this holiday season. And several big names have been active behind the scenes. One of the major highlights was Meta Platforms acquiring an AI startup called Manus, a company focused on autonomous general-purpose AI agents. Here's what's important about this. Manus developed AI that can make decisions and act on tasks with minimal prompting, essentially a building block for next-gen AI assistants. Meta plans to use Manus's technology to boost its AI offerings across products like Meta AI and other services. The company is Singapore-based with roots linked to China, and Meta is positioning this as a core part of its AI strategy going into 2026. SoftBank, the Japanese tech investment giant, has also been actively moving cash around AI, not just with acquisitions, but with strategic portfolio reshaping. While the information points to SoftBank being part of the holiday deals, we also see related moves such as SoftBank's $4 billion acquisition of Digital Bridge, a data center and infrastructure investor that supports large AI workloads in connectivity. Here's why that matters. SoftBank has been reallocating capital over the past year towards AI, including funding OpenAI and expanding into AI infrastructure. Buying Digital Bridge fits with this strategy because data centers and connectivity are key to running massive AI models in cloud services. On the Nvidia side, while the information article highlights Nvidia's involvement in holiday AI deals, the broader context shows Nvidia continuing to make strategic agreements, including its recent licensing deal with AI chip startup Grok that signals future technical cooperation and talent shifts. Nvidia is protecting and expanding its lead in AI chip infrastructure. By engaging with cutting-edge AI chip innovators, Nvidia stays ahead in both training and inference hardware development. Those weren't random AI headlines. They were strategic moves, and they tell us exactly where this industry is heading next. Stay tuned to Alverse Edge.